There are certain restrictions in place to prevent banks from forming monopolies. There are restrictions to make sure that you keep your money safe. But in times when greed overtakes people and corporations, times get tough very quickly. Today we are witnessing another huge mistake that will act as a catalyst to the financial crisis, part 2. You came here for the truth, so let me unveil that for you. Today we are going to look at some very serious information. Guess what? The same problems are occurring over and over and over again. So we'll start with that today. The Volcker Rule. You may know of this. Well, the rewrite is said to drop trading burden on banks. That's right. A trading burden. So we'll get into that right now. Wall Street is poised to get a big reprieve from the Volcker Rule as U.S. agencies prepare to scrap a restrictive presumption that most short-term trades violate the post-crisis regulation. Well, they always want to be able to pull back those restrictions. They want to restrict you in every way, but they want to pull back on restrictions on the big banks. In a much anticipated overhaul, the Federal Reserve and other regulators, they are not regulators, are planning to drop an assumption written into the original rule that positions held by the bank for less than 60 days are speculative and therefore banned. Instead, banks would have leeway to conclude that their trades comply with the rule, putting the onus on regulators to challenge such judgments. Think about this for a second. The SEC, in the previous, let's say, 2 instances, where were they? What about the rating agencies that were rating all of the worst garbage derivatives as AAA? Where are the safety nets that we're being told are put in place and never, ever seem to be there when we need them? The same problems are occurring specifically for the reasons that we don't utilize these restrictions in the proper way. Look, if you want to open up the floodgates, that's one thing. But if you want to restrict us and then open the door for them, then we have a very big problem, because then it's all on us. They get all the protection. They're too big to fail. And you and I, well, you know how the story goes. So there's more of these examples here. I'll get into one. A decade after the federal government rescued the first of many faltering financial firms, the Senate voted on Wednesday to pass legislation that would relax restrictions on large parts of the banking industry, representing the most significant changes to the rules that were put in place after the 2008 financial crisis. Here we are, yet again, in this case, talking about the DoddFrank Act. And essentially, they're trying to make it a little easier for banks to do business. There was this whole thing about Glass-Steagall, and that was trying to restrict how big banks could get, so that you wouldn't want, for example, some sort of investment company to have their assets mixed in with a company that was holding on to people's deposits. Seems logical. Well, they just repealed that. And then the banks grew bigger and bigger and bigger. And that's what's going to happen again. And then, of course, we will be faced with some sort of crisis in the future, whether it's derivatives or, who knows what it could be. But we're always making the same exact mistakes. It is quite foolish. Look at this. All right. A significant number of bank officers who responded that their institutions had eased lending standards responded that they did so in part because of aggressive competition from other banks and non-bank lenders, a willingness to accept more risk Relatively stable commercial real estate prices, vacancy rates, fundamentals, and capitalization rates also played into the decision to loosen up on commercial loan terms. Hey, you can't afford it? Don't worry about it. Just sign on the dot. And that's the way it works. I've shown you the examples of this over and over and over again, and it never ends up well. So now I'm going to go all over the place, different information that I just want to show you here. I think it's so important. Looking at the foreign holdings change in U.S. corporate stocks right now in March, take a look at where it is. I mean, we haven't seen these levels since September of 2015. Going back, a lot of selling off that took place here at this time. It's not a good thing when you're seeing all of this sell-offs, whether it's foreign or domestic, it doesn't matter. Okay. Real average hourly wage growth for the bottom 80% of workers. Okay, the majority of the people. And look at this. Basically, throughout 2017 and into 2018, it's been dismal, if not negative. And where have we seen these negatives before? Back in this time frame here, 2011 to 2013, which Europe at the same time was encountering a big mess, and also back here during the recession. It's unfortunate to see something like this because this is real people being affected. Oh, and by the way, during 2017 on to the first month of 2018, we had seen incredible stock market growth. So the wages don't go up, but assets may. Speaking of stocks, we're looking at buybacks here. This is from an article out of Barron's, but essentially just wanted to show you here. I've seen different numbers of this. In this case here, they're showing an estimated $650 billion that will be for stock buybacks in 2018. Companies in the S&P 500 index may repurchase a record $650 billion of stock this year. These numbers continue to escalate as the years go on, which is, as far as I'm concerned, worrisome, but others may disagree. Sweden's got a major supply and demand problem. Its fabled welfare state is forecast to need an extra 200,000 employees by 2025 just to keep up with growing demand. The trouble is, only 207,000 workers are projected to join the country's entire labor force, public and private, over the same period. So it's going to go on into the details, and essentially this is the problem I have with government programs, Ponzi schemes. They are never ever going to meet the demands. Maybe at some point they could say, hey, we have a surplus, look at us, we've done so well. And then, for the next 20 years, you'll be hearing about that surplus that's long gone. But anyway, what we can take from this is that whenever we put the government in charge of something, they screw it up. Do not rely on their programs. Look, if you're getting a pension or you're expecting to get a pension at a later date or some sort of, social security or anything else, if you're expecting it and you get it, great. But if you are literally relying on it, that is so dangerous. Please do not do that. Get prepared instead. It's absolutely critical. All right, Japan has been selling off here, something I've been covering now. Their treasury holdings have been declining since, looks like, right at the end of 2014, and they've been declining ever since. Many were worried that it was China that would be doing this, but seems to me like it's Japan. Now, they could be trying to play around with their currency. They need that money for something else. Obviously, it's not necessarily that they're going to be selling off their entire treasury holdings, but we're nearing, under $1 trillion. So I would have to think that it's starting to get into that level where, maybe some people are shaking in their boots a little bit. I thought this was absolutely strange, but, shouldn't surprise me. Seattle is introducing a tax on large employers that will help fund homelessness and affordable housing programs despite opposition from companies such as Amazon. So you're going to take from the companies to give to the people who need it, right? Okay. I could probably interview 100 people, and I would say at least 90 of those people would say this is good. Here's the problem. If you put taxes on these companies, if you start making it more difficult, you start introducing regulations, these companies will move elsewhere. They don't give a damn about made in America. They don't. And that goes for any country. We can't be this foolish, please. All right. Very quickly, again, Argentina intervenes in the market again, trying to push that up. I mean, it doesn't work. Look at what happens every time. It just drops down immediately. It's just, I'll cover it again in my next videos, and I'll show you. It's just a complete and utter failure. Admit the fault, take care of the problems, just excavate everything that needs fixing, take the hard times, and then rebuild. But of course, no country ever does that, and that's the end of this video. If you found this video informative, I know that you will find my books, The Money GPS, and my new release even more informative. You can flip through the books at Amazon. Links are in the description below. Take care.